Welcome to the 15-Minute Financial Feast podcast, bringing you 15-minute segments to help you retire with purpose on time. We're serving up food for thought and bread for the head. Are you hungry to learn? Here are your hosts, Mark Triplett and Troy Westendorf.
Welcome to another episode of the 15-Minute Financial Feast. I'm your host, Mark Triplett.
And my name's Troy Westendorf.
And today we are going to be talking about claiming Social Security, whether to take an early claiming strategy or a delayed claiming strategy, and what are the pros and cons of both of those. And particularly, we're going to focus in on cost of living adjustments, as well as the impact of a claiming decision on the survivor benefit when we're dealing with a married couple, for example.
Mark, I say take it early. Do the math. If you took it at 62, do the numbers, stretch it out for 30 years, you're way ahead of the game by taking it early.
Yeah, getting well, it's good, right, Troy?
Yep.
How many times have we heard that? Unfortunately, it's one of the battles that we have time and again is confronting poor information that folks get from their neighbors or their friends or
employees,
somebody else in their life that is not a financial professional, that doesn't understand how Social Security works or how it operates with your other retirement resources, and they get advice to get the getting well, it's good, and claim early, because if they claim early, even if they don't need it,
right,
I'll just put it in a savings account and
invest it
and get a rate of return on it, and I'm going to be ahead of the game.
Yep.
Okay, so we've heard that many times, and a lot of folks make a claiming decision to claim early based upon that. Well, what happens when we claim early? Let's talk about just the impact of a early claiming decision. So when we say claim early, we mean claim prior to your full retirement age.
Correct.
Your full retirement age is based off of your date of birth. For most folks that are listening to this podcast, your full retirement age is probably going to be somewhere between 66 and 67, depending on your birth date. And a lot of our clients now, their full retirement age is closer to 67 than 66, just because of the nature of the type of folks that we serve who are not yet retired, but preparing for that transition in the next 5 to 10 years. And when they claim early, prior to full retirement age, they're forfeiting a portion of their benefits in doing so. And so the earliest that you can claim currently for most folks is 62. Now, we could talk about widows, and that's a different topic for a different day. They can claim earlier, but most folks, you can claim on your worker's benefit, so your own personal worker record, as early as age 62. But when you do that, you forfeit your benefits, a large percentage of your benefits, somewhere between 25 and 30%, depending on your date of birth again, your full retirement age. And not only do you forfeit that percentage of your full retirement age benefit, you also forego any cost of living adjustment that you would have been rewarded or would have been awarded to that forfeited portion of your benefit that you already gave up.
Right.
And so that's where you got this discussion about, do I claim early or do I claim late? Often folks try to come down to like a break-even decision. Yeah. Well, if I live this long, then I'm better off delaying. And if I live earlier, or if I die earlier, I'm better off getting well, it's good. And the program's going to run out of money and yada, yada, yada.
I don't plan on living till.
Yeah, don't plan on living that long. Yeah, we hear that stuff. The reality is those folks are not taking into consideration the cost of living adjustments and the impact on their cumulative benefits over time. And number two, the tax advantages of Social Security as an income source versus taking that money, investing it, and then having to pay capital gains or ordinary income, depending on the type of returns that they're receiving from those investments. Social Security is tax advantaged. At least 15% of your Social Security benefit will never be subject to tax. In the state of Iowa, none of your benefit is subject to tax. Right. And I say at the federal level, at least 15% of your benefit will never be taxed, because under current tax law, even if your Social Security benefits are subject to tax, only up to 85% of the benefit could be subject to tax. Now, we can do some strategies perhaps that will limit the amount of somebody's Social Security benefit that is subject to tax so that they have less or more than 15% that's not subject to tax at all at the federal level. But even in worst case scenario, Social Security is a tax advantaged income stream that you cannot get anywhere else. And so to make a rash decision on how and when to claim based on hearsay from folks who are not financial experts, who have not studied your individual circumstances, who have not done a complete analysis on how to coordinate your benefits with your spouse, for example, or how to coordinate your Social Security benefits with your other retirement resources, like a pension if you're fortunate enough to have one, or retirement accounts like IRAs, 401ks, other IOUs, the IRS, and how those work together. When you start making decisions based on information you get from folks who haven't done that analysis and are not financial experts, oftentimes you're going to lead yourself to making a mistake that is irrevocable.
Correct.
And not only can it impact you, it might impact your spouse.
Yeah, which is often they forget about as well.
That's kind of the biggie that we try to drive home. Oftentimes when we're looking to make a claiming strategy, when we're advising somebody on how to make a claiming strategy that's going to benefit not only the household as far as cumulative benefits goes, but the survivor benefit. So the surviving spouse, to make sure that individual has the highest benefit possible. We often find that it makes sense for one individual in the married couple to claim early, often the lower wage earning spouse, and oftentimes it makes sense for the higher wage earning spouse to delay. And oftentimes, not always, but oftentimes that higher wage earning spouse is older, male, didn't stay home with the kids.
Right. Yep.
And that's the person that is often most inclined to make a poor claiming decision of claiming early because I'm not going to live that long and I want to get to getting while it's good. And we really have to struggle with re-educating over and over that we're making these claiming decisions based on all of your retirement resources, based on you and your spouse as a household, and what is going to benefit not only the household, but also the likely survivor to take pressure off of the other retirement resources later on in life and to make sure that surviving spouse is going to be well cared for. Now, let's talk about the cost of living adjustment for a moment. That is overlooked when making claiming decisions.
Right.
So by law, it's written into the IRS code, Social Security receives a cost of living adjustment. So this isn't something arbitrarily decided by a bureaucrat.
Yeah, as much as they make it sound like that.
Every year, the Social Security cost of living adjustment is calculated in October based on the Consumer Price Index for urban dwellers or CPIU. And like this last year, everybody's kind of feeling the pinch of inflation. As a result of inflation, as a result of the cost of living increasing, Social Security's cost of living adjustment for 2023, drum roll please, is 8.7%. Now, currently the market is down.
Right.
So your stock market investments are down because equity markets are down.
Yep.
Currently, interest rates have risen substantially. So if you own fixed income bonds, for example, not only were you getting a low yield, now you're seeing double-digit losses in the less risky portion of your portfolio. So those are down. Social Security is the only resource then in your household, if you are retired and receiving those benefits, that is actually getting a positive step forward. And this is one of the reasons why we stress how important it is that it's a unique source of retirement income that you don't have access to anywhere else. As a insurance agent, somebody couldn't sell it to you. If you were dealing with a registered representative of a broker dealer, which we are not.
Right.
I'm an investment advisor. But if you were dealing with somebody like that who sells investments, they can't sell you more Social Security. And as an investment advisor, guiding clients to make the best claiming decisions that we think is best for their plan, we can only try to coordinate their benefits in a way that we think is going to optimize it for their household and try to get as much of those benefits that they're going to be likely to get throughout not only the individual's lifetime, but the household lifetime, and make sure that they understand all of the ramifications of claiming early versus delayed strategy. And Troy, how many times do we run into this where it seems like even more than annual reviews, we have to kind of rehash this out again because folks that we serve are getting hit from the media.
Yep.
They're getting hit from other folks in their lives who are not financial experts telling them that they need to claim early.
Well, and you just hit on it too. The markets are down. So if the markets are down, it makes sense to me that I should turn on my benefit early so I can have some cash flow coming in now rather than delaying my Social Security benefit.
And I would say that I've seen plenty of articles in the financial media articles that are promoting such a strategy. And I suppose if all of your money, all of your retirement assets have been exposed to market risk, both stock market and bond market risk. So you've been doing it yourself, or you've been working with a financial professional who follows the status quo. Everything's got to be invested in the market.
Yep.
You might be in that corner.
Right.
That might be the best decision for you. But when we're working with clients, we've always taken measures to make sure that a portion of their assets are protected from a market downturn, both equity market and fixed income or bond market.
Yep.
So that they're not backed into a corner to make those decisions. So that when they do make that transition from their working years to the post-working years, even during a market downturn, even one that's impacting both equity markets and fixed income markets, that they have dollars in a place that didn't lose any value during that period of time, so they can make a decision to pull from those assets as opposed to selling into a downturn or worse yet, turning on their Social Security benefits at an inopportune time just to avoid selling investments at a loss.
Yeah, and I think that's the nice thing about having a plan. So we have a plan, we have planning software. We can go in, we can say, here's what it looks like if you claim early. Right before your eyes, you can see what happens to the plan. If it's not a big adjustment or to have a big impact, then you can make a decision. Do we want to claim earlier than what we expected? But at least you can see it. These ones that just go to a notepad and start crunching numbers on, here's what my benefit's going to be, here's how long I need to live, they're just not looking at the full picture. But the other question we have, Mark, is this. I want to retire, so if I'm going to delay my Social Security benefit past my full retirement age, I don't want to do that because I want to retire before the age of 70.
Yeah, you're right. We hear that a lot too, and we hear that in a lot of our classes. It's a misconception that in order for you to retire from your employment, that you have to claim Social Security. It's not true.
Or get Medicare.
Yeah, your decision to retire from employment, you work for a company or you own your own business or whatever it is, but you're trading your time, your expertise for an income. And your decision to stop doing that, quote, air quotes, retire, has nothing to do with whether or not you have to claim Social Security or not. You can retire and not claim Social Security and delay it and receive delayed credits beyond your full retirement age, et cetera. You can make an optimal claiming strategy for your household and still retire. We just have to fill that gap for a couple of years while you're delaying from other retirement resources. And this is where I think advisors who specialize in organizing all of your retirement resources, including strategies to optimize Social Security, understand how these spending patterns work. These distribution patterns are very different. Most folks will turn Social Security on early. They'll probably spend all of their after-tax money first to try to keep their tax rates really, really low. Yep. They'll delay taking money from IRAs until they need to or until they're forced to by the IRS, requiring them to make distributions. And then, later in retirement, they get hit with these huge tax bills. when you start optimizing Social Security for a household, you really start doing the type of financial planning that that we enjoy doing so much for the folks we serve. You get very different distribution patterns on how and when you use your resources to coordinate along with your Social Security benefits. And sometimes that means maybe distributing some of those retirement assets, the IRAs, 401ks, the other IOUs, the IRS, earlier on while you delay Social Security. And so you're spending down some of that pre-tax money so that you have less pre-tax money or less IRA money forced out in retirement due to required minimum distributions. We might even do some Roth conversions, which we talk about in other podcasts. Right. But trying to delay Social Security to optimize benefits for the household, to optimize benefits for the survivor benefit, to try to equalize how much you pay in taxes now versus into the future, and rather than kind of saving on, not saving, that's a bad word, deferring taxes further in retirement, making your tax bill very low early in retirement, only to get whacked in your later years in retirement, creating problems like income-related monthly adjustment on Medicare, or the widow's penalty, where the surviving spouse sees his or her income go down, but their tax rates go up, and their Social Security, a portion of Social Security that's subject to higher tax rates goes up, and they get hit with higher Medicare premiums. We try to see in the future using our programs and our philosophy to be able to minimize all of that. And that's a very different spending pattern when it comes to how and when you use your retirement resources than what I would say most folks are planning to do. And working with a financial professional that understands how Social Security works, how it coordinates with your other retirement resources, how to make a optimal claiming strategy for your household. Looking at not just what your benefit is, but how is your benefit coordinated with your surviving spouse, and how are you going to optimize it for that unique resource with those great cost of living adjustments, a government-backed, inflation-adjusted, tax-advantaged income, to optimize it for your household rather than making a poor claiming decision. And we'll re-educate the folks we serve year in and year out. But nothing crushes us more than when somebody makes a decision to claim Social Security after we put a plan together, and they've done it without consulting us. And then we find out after the fact, and now we have to readjust everything. And frankly, it usually hurts their overall plan.
It has an impact, yeah, absolutely.
Yeah. And it usually has an impact not just on them, but they're likely their surviving spouse, which is even worse. So if you're not sure how and when to claim Social Security, and you're listening to this, reach out to us, schedule some time to visit with us, come to one of our classes. If you're one of the folks that we serve right now, and you have questions about your claiming strategy or something we've gone over, reach out to us first, please, before doing something irrevocable. And that way we can work through it together again.
Absolutely.
Well, that's it for this episode. Thanks for joining us.
Thank you.
You've been listening to the 15-Minute Financial Feast podcast. Remember, every dollar has a purpose and every dollar has a timeline. If you have questions about today's topic, schedule a call with a team member. Visit www.mypt5.com. Until next time, be sure you're taking steps to retire with purpose on time. Mark Triplett is an investment advisor representative of and advisory services offered through Royal Fund Management, LLC, an SEC-registered investment advisor. Nothing contained in this program should be considered an offer to buy or sell securities. Different investments have different risks associated with them, and not all investments are appropriate for all investors.